Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We are taking a look at what we've got going on here in gold. I was just taking a look at some of the gold positions we've got here in the mastery, and we went into the long weekend, long gold via GLD and long GDX via calls for, I'll tell you right now, I was just sending out the recap to the Sector Secrets Mastery. So we've got 21 March, 41 calls, and in GLD, we bought the 7 March 266s. So I'm taking a look at the overall strength in the market, taking a look at the S&P right there, the S&P market. We also still have open a long XLF position, taking advantage of the strength in numerous banking stocks. So rather than picking and choosing which banking stock within the XLF we want to trade, we went with more of that, what I call the tide over the boats of, hey, let's grab the ETF. It's a lot of bang for the buck, and we're able to benefit from that. So here's what gold's doing this morning. Big move down last Friday within an overall uptrend. That is something valuable going on sale. What's the value? The trend going on sale is the pullback. Same thing with GDX. GDX should, I'm never going to presume, but GDX should track with gold. So I would anticipate some nice strength in GDX following gold higher. And even if it's delayed by a little bit, gold makes a big move. These gold mining stocks might move a little bit after that. The commodity goes first. Those stocks, those companies that are tethered to the commodity go after, right? And then taking a look at that position in the XLF, it's going to benefit from that strength in the financials, but ultimately it's going to benefit from strength in the Dow. The number one weighted sector in the Dow is, in fact, the financials. And that's where we want to remember that the sectors and the indices, certain sectors are tethered to the indices in a way that's inextricable. And when you think about financials, when you think about tech and the NASDAQ, financials in the Dow, tech and financials in the S&P, this is why certain sectors and certain stocks are far more important than others in the overall picture of things. All right, so that's what we've got going on right now. This morning, 3 open positions coming out of that long weekend, mostly taking advantage of what's by far been my biggest trade of the year, whether that be the ETF or whether that be the underlying futures contract. Some of you might have seen that in the webinar that I did on last Wednesday and this past Wednesday, and that was the gold futures, whether that's micro, whether that's mini. Everything that I teach you all or everything that I show you all can be traded usually numerous ways. There could be the futures contract, options on the futures contract, the ETF alternative. That's what makes trading so great. There are ideas that we can take advantage of in numerous ways. Then take that gold idea out to gold miners, and then you can build a whole trade idea around, really what's a singular idea of the futures contract of gold moving. So really exciting time to be a gold trader right now, but it's an exciting time to be a trader, period, as long as you're frankly bullish. So let's talk about something. Of course, we do have a couple of events scheduled this week. Today, at some point, it's tentative. We're going to hear from the president. No doubt this press conference will have some insight into the ongoing tariff conversation. Now, here's what's interesting. When the tariff, and think about this, don't take my word for it. Go look at the chart, but I'll tell you what I saw and how we're responding in kind. When the first announcement of tariffs came, and they tend to be over the weekend in the early part of this administration, shortly after the inauguration, this is just about timing, gang. This is just about understanding the catalyst for movement. The initial announcements of tariffs were pretty bearish. And then since then, the volatility and the risk is not to the downside. In other words, if you're bearish, there's far more likely as traders like to call it, a rip higher or a face ripper, right? A rip higher on the negotiations, on the delay, which is just another negotiation aspect of the tariff. So the risk is to the upside. In other words, if you're going to be taking a look at being bearish into the uncertainty, a lot of that's played out. Traders are still very much sticking with buy the dip, taking advantage of things on sale, right? And so ultimately, what we want to remember is that these are just narratives, right? These are just narratives, and they're going to continue to be a lot of volatility. My mic boom is slowly sinking. There we go. So if we have ultimately just a knowledge of the response, that's all we're looking for here, right? That's all we're looking for here. And, here's where I know traders are going to get lost. And I can see a little bit of it, frankly, in the chats right now. This isn't about the politics of it, gang. You want to trade well, stick with the psychology of it. This is not about the politics of it. That's why we have a hard and fast no politics rule in the Sector Secrets Mastery. A, it has nothing to do with trading, and B, it's a rabbit hole, right? So what I'm talking about are catalysts to movement. Now, which direction do we want to trade that catalyst? Well, this show is really about me talking my book, right? Everyone here, including myself, we need more analysis about what we see and feel like we need a hole in the head. What we need are ideas, direction, watch list, and then someone to talk their book. In other words, this is where I'm taking my trading ideas to. This is where the rubber meets the road. Long calls on XLF. Take your pick within the banking stocks. A lot of them look phenomenal. In fact, why I went with XLF is because so many stocks look absolutely phenomenal in terms of bullishness and clarity. I would pass on American Express. American Express, trading that in this group is just a basic misunderstanding of why things tend to move, right? Same thing with trying to buy something like BLK or BX. If I'm looking long, find things that are already behaving in that way, take advantage of a dip, look for the continuation. That's high probability. Looking for something to play catch up, like American Express, that's low probability. It's possible, it's just not probable. Visa continuing to punch up to higher highs, that's probable, right? It's more likely than not. And that's where a lot of traders get caught up in looking for a needle in the haystack, looking for that stock that's about to make a big move. If you're looking for, and I think we're all interested in that, right? Trades about to happen are things that are typically already bullish and moving higher. I wouldn't even say bearish, right? Trades about to happen isn't, hey, this market's been moving sideways, it's due. No, it's not, right? If it's not tracking with the sector and the index it belongs to, there might be a narrative keeping it in check, stuck in a range, right? We don't need that. We don't want to hope that that's going to move. Hopes and wishes are for birthday cakes, they're not for our trades. Find things that are already moving and just look for that continuation to occur. All right, so let's go ahead and take a look. If anyone has any questions, a symbol that you're looking for, let me know. You can check out the webinars that I did this past Wednesday and the Wednesday before over at simplertrading.com/consistency-replay. You can find them on the Simpler Trading YouTube channel as well. The last two, I go over two very different sets of examples in both those webinars. Check them out. And then the first workshop. So this is a class that starts tomorrow and we'll be going in through May 7. And every Wednesday for 1 hour, we're going to have a classroom session. So the cool thing is you can go at your own pace. You can absorb this material over the next 3 months, ask questions as we go through. So rather than a single day class, we're going to be doing a 3-month-long immersion. That begins tomorrow. And you can check that out at, I think I have the link here somewhere, my.simplertrading.com/immersion. And the webinar replays are at the aptly named consistency-replay. All right. So hopefully everyone gets the chance to check that out. You're going to learn a lot about my trading process. You're going to learn a lot about my trading tools. And this is going to allow you to see, once you join the immersion, what the tools, rules, and style, what is the strategy that we're deploying this year, and what I have frankly deployed for the better part of 3.5 decades. All right, so let's jump into a couple other places. And there's a lot of conversation about XLC. It's one of the strongest sectors within the NASDAQ. So yeah, fine wine, I'm with you. What's going on with, say, Meta? Now remember, Meta is the number one weighted stock within XLC. And when I'm looking at something like XLC, what I want to do, actually, let's do this together, because this is going to give everyone a nice look at the process within the immersion. All right, so you open up XLC and you take a look at what's moving higher with that strength in the sector. Now that XLC ETF, unfortunately, is not liquid across multiple strikes. It's very problematic, and it's very unfortunate because it's a gorgeous looking sector. But take a look at what's powering it higher. Meta, Netflix, Take-Two, TMUS, and Live Nation. Okay, cool. What do we want to avoid? Avoid Disney, avoid Google, right? Those are not tracking with the strength. So if we're taking a look at Meta, that's a terrific candidate, fine wine, for a stock that's going to move with the XLC, for a stock that's moving the XLC. So Meta, if you take a peek, this is a pure, oh gosh, you ready? This is my bread and butter play, gang. You want to know my favorite setup, my favorite, just kind of paint by numbers approach to finding a trade? You're going to see it right now. You ready? Start at the bottom of the chart. That's probably the first thing to do, because the bottom of the chart is likely the most important. It's the structure, right? And the top tier squiggle is technically the bottom, but I'm talking about this right here, which is our multi-structure tool. So this is the tool that I use for real-time assessment of momentum. I'll sometimes call it Momo and trend. So I have an uptrend. This lower row is green. That is an uptrend. Great. I have consistent green colored candles. These are the top tier candles. All right, great. What are they measuring? They're obviously measuring direction, but they're also measuring participation. That's bullish. Terrific. And it has been for a really long time. This is the third week of January here. All right, moving on to where we are right now. Right edge. We trade what is, not what was, and it persists in being bullish. So anytime a green candle sinks into the gray zone, that is the trigger to buy the dip. So I would continue, fine wine, to look for buy the dip opportunities in Meta. Uptrend, green candles, gray zone. What is the gray zone? The gray zone is support, not based on price, but really more based on time and volatility. Now, most traders use price alone, meaning open, high, low, close. If we can start using time plus volatility, we end up with these zones. This is historical volatility. And this is a zone that updates every single day automatically on your chart. So there's nothing to draw. There's no settings. There's no tweaks of the settings. All right, those are rabbit holes. This is a historical look at volatility, and every single day we're going to have a brand new gray zone, which, by the way, is support. And we'll have a brand new gold zone. And the gold zone is resistance. And we just use those to understand the context of potential probable movement in whatever we're looking at. So fine wine, yeah, great symbol to definitely keep an eye on. Yeah, love it. Okay, moving on then to, well, actually, since there's another stock in that group, let's do this. Netflix. All right, Netflix, as you notice, was another one of these strong names. Now, Meta is a spendy option. It's not an inexpensive option. It's definitely liquid, but it's not inexpensive. If you take a look at, here's again, green, lots of green candles. It's been very strong since earnings, and it's maintained that strength very consistently since the end of January. Green candle, gray zone. That's it, right? So that's another stock that's an outperformer in communication. What about T, right? Another stock, outperformer in communication. And so if you take a look, whenever I'm going from symbol to symbol, again, direct your eyes down here, look at the majority of the candle colors, great. And then you know what to do. Stick with alongside, buy the dip. Now that's a very different conversation if we go on over to two very popular stocks, Apple and say NVIDIA. All right. Notice that for the most part, looking for that kind of follow through has been hit or miss. This has been a wild ride. It's been mostly bearish. Bears did pretty darn well in this time because the dominant candle color was red, right? So if you were looking for long puts and instead of buy the dip, you actually take advantage of the rip. So instead of buying calls into a dip, which is a bullish strategy, you buy puts into a rip, which is sort of the opposite, if you will. Now that the green candles have shown up, it doesn't mean that we're bullish and up and away. Please remember that. There are far better symbols in the current environment than waiting for Apple and Nvidia to wake up. Low probability versus high probability. Yeah, it's doing what it's doing, but would you rather just, trade something that's just stair-stepping higher and giving you dips along the way? Or would you want to buy something that's been so weak with the hope that it's finally going to break out? I guess some folks might want to do that, but it's a very different school of thought when it comes to trading. My job is to find things that are already behaving a certain way and just presume that continuation is far more likely than a sudden breakout or a reversal. Yet, I would say 80, 90% of traders out there are pinning their account growth expectations to sudden reversals. Oh, this downtrend's due to reverse. No, it's not, right? Or this sideways market or whatever is due to break out. It doesn't have to, but it's far more, that's possible, right? But what's probable is something that's moving higher is going to continue to move higher. So NVIDIA is the same kind of thing. Would I rather trade JP Morgan or bank stocks over things that have been very, very weak and suddenly have woke up? I know there's an excitement on suddenly. We're not looking for excitement. World's most boring trader right here. This is boring. And it's amazing how often boring is actually productive, right? And what we mean by that is it's a trend. It's not trading in a dramatic way. No sudden breakouts, no sudden moves. Sudden moves mean usually abnormal volatility. Abnormal volatility usually tracks to more risk. Gang, orient your trading life to reducing risk. There's a saying, take care of risk and the profits take care of themselves. I think that's very, very true. Our job is to manage risk, right? And that's probably the opposite messaging of just about everybody in trading who's saying, let's do this and double an account. Let's do this and go have a picnic. This is so easy. Gang, it ain't easy. But the easiest it does get is when we find those little pockets in the broader averages that are behaving like the markets that we loved in 2020. That was an uptrend. Find the 2020 out there, right? That's the message for the last 4 or 5 years. You love 2020? Great. Find the little pieces of 2020 out there. In other words, find those strong trends. And if they have alignment from index sector stock, all the better, right? All the better. That's really the watch list building process. And I overall, when we look at typical behavior, most retail behavior is the opposite of that. They want to go treasure hunting. They want the excitement. They want to find something that's moving lower and pick the bottom. Good luck with that. That's not a scalable approach. And that's why a lot of traders and investors, frankly, get hurt, right? Okay, so next up, how are we doing on time? Okay, I'm just about out of time. All right, so the last thing I want to take a look at is where gold is here this morning. I know we have a lot of our Sector Secrets Mastery folks joining us right now. Yes, gang, as soon as we can hit the optional T1, the Lorna bot, who is very much a human, that's our nickname for, is going to send out a reminder. Now, remember, when this alert went out, let me show you all something. And this will be a great place to wrap it up. There we go. This was the gold setup. Do you see this is what got sent out to members. This is what you need to expect from any kind of trading guidance, right? This is not go do this. This is really more about, here's my plan, check it out. See if it works for your risk. See if it works for your reward. See if you understand the concept, right? This is not about a blind trade along. What you see here is what I'm going to trade, where I'd like to get in, the specific prices of all the entries, not adding later on like, oh, surprise, surprise, I'm down. I want to average my cost basis. No, gang. Pre-planning, right? Understanding where all the triggers are, understanding where the scale out is. Why on earth would I ever want to get into something, share that idea, and not tell you where I'm going to get out? Get out has 2 flavors, right? The one we hate, the black licorice. I know, no offense to people who like black licorice, but the black licorice is, okay, what's my stop loss, right? And then the fun part, where's my scale out, optional and first target. And everyone has the entire blueprint and can make a decision for themselves, right? That's what a trade idea should look like from everything right there at the very beginning. And this is what we did on Friday. And by the way, that was the GDX trade. Same format, right? Same format. Okay, gang, as always, thanks so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. Be good to each other.